And just a short time ago, the Federal Reserve said it will review its supervision of the failed Silicon Valley Bank. That comes after hours after President Joe Biden urged Congress and regulators to restore greater oversight on the nation's financial institutions.
So the president told Americans and small businesses they will be able to access their money and cover their bills, and taxpayers will not be funding another bank bailout.
Americans can have confidence that the banking system is safe. Your deposits will be there when you need them.
Now, the president said he believes the Trump administration's rollback of Obama-era requirements on smaller banks, which was approved by Congress, contributed in part to the failure of Silicon Valley Bank. It's the second largest bank failure in U.S. history. The Federal Reserve, Treasury, and FDIC are taking over Silicon Valley Bank, guaranteeing all depositors will have full access to their FDIC-insured money today, up to $250,000.
Meantime, state regulators in New York are also taking control of the now failed Signature Bank, which was funding many cryptocurrency and real estate companies. Officials say those customers will also be able to access their money. And while you may not have money invested in these banks, what's happening right now could affect you.
News 5's anchor Tracy Carlos shows us how.
Nichelle McCall Brown is a small business owner. She and her husband own the monthly subscription box service called Landmark Kids.
It is unnerving, absolutely.
She's also the founder of Bold Startups. It's a company that helps entrepreneurs get funding. She's watching what's happening with banks, including Silicon Valley Bank, closely.
They're a major player in the startup entrepreneurial space when it comes to funding.
If you think that a failure of a bank in California doesn't affect you, you might want to think again.
There's a big ripple effect in multiple ways.
For instance, in Brown's case, for her small business, she might not use the bank, but
if we were leveraging some of these other small businesses to fill some of our boxes with some of their toys and their products to teach other kids, now we're not able to work with those small businesses because they can't sell their products on that platform because the bigger marketplace platform is in a situation where they're not able to access their funding.
And this all happened quickly. First, Silvergate Bank announced it would shut down operations on March 8th. Then Silicon Valley Bank was taken over by the government March 10th. That was the second largest bank to ever fail. Then 2 days later, regulators closed Signature Bank, the third biggest bank failure.
Those that had money in their bank accounts at those banks that either liquidated or got taken over by the FDIC were moving their cash out of the bank. So what we would have talked about in the 1930s as a run on the bank. So in the digital age, that can happen very quickly now.
So what does all of this mean for you and your money in the bank? Greg Harmon is assistant professor of banking and finance at Case Western Reserve University's Weatherhead School of Management.
The government did the right thing. They stepped in and they calmed markets by putting this facility in place so that you and I can be comfortable that we don't have to go down the road to our bank and take all of our money out. They've guaranteed that the money will be there and will be available.
In Cleveland, Tracy Carlos, News 5.
So, of course, a lot of people have a lot of questions about what this government takeover of those banks means for their own money. That includes their tax dollars. And obviously, you heard the president say this was not a bailout. So just for a second, let's break down the difference. The Washington Post spoke with a Treasury Department official who explained that unlike when banks were bailed out in 2008, these executives will not keep their jobs. And the money the government will use to cover the deposits is coming from a fund that U.S. banks pay into, not from taxpayer dollars.
Americans are optimistic and believe inflation will drop within the next year. The New York Federal Reserve's survey of consumer expectations came out today, and consumers believe they'll see relief with prices on food, rent, medical care, and gas. Consumers also think home prices will continue to rise about 1.5%. The Federal Reserve uses this survey as it determines next steps in fighting inflation. It wants expectations to be around 2%. If it's higher, workers may demand raises, which will ultimately cause prices to rise. The latest inflation numbers are expected to be released tomorrow.